What's happened today? Luckily, the U.S. refinery system has added over 200,000 barrels of capacity this year alone. So this refinery, which has a little over 300,000 barrels of capacity, is a big impact. But luckily, the U.S. refinery system is probably better positioned to handle a disruption of this sort than they have been in years past.
All right, let's move on then. In terms of Iran and the impact on the oil markets, I mean, if you add up yesterday's advance as well as today, it's about a 5+% move in response to, the strike of the drone over the Iranian airspace. And so I'm wondering, Kyle, how you interpret this move in oil and how you see that sort of indicating what people think about what's going to happen in this region.
Absolutely. This just heightens the fear that the Straits of Hormuz could be shut down, where between 17 and 18 million barrels of oil a day flow out to the rest of the world. Luckily, due to the recent Iranian sanctions, Iranian production is already down from about 3.8 million barrels last year down to just about 2.3 this year. So further disruption from Iran actually wouldn't fall off that much more than it already has. Saudi Arabia, UAE, Kuwait, Russia, and obviously with U.S. production increasing, the world is once again better equipped to handle a disruption than it has been in years past. But that doesn't obviously remove the fear that things could get really bad.
If they did somehow block the Strait of Hormuz, Iran, I'm talking about, block the Strait of Hormuz, Kyle, I mean, we read that 20% of the world's global oil supply comes from the Middle East. Could that disruption have an impact on global oil markets, or do you think that we sort of had the workarounds in place so that the impact would be de minimis?
I think the impact would be much less than it has been in years past.
Okay.
Also, while certainly heightening the potential, I think that if things really got bad, the U.S. Navy would start providing escorts for tankers going in and out. Would that still result in a price spike? Sure. But I'm not one that thinks that physical oil will be at a shortage across the world.
Sounds almost like you would fade this 10% move on the week, Kyle.
Well, to a certain extent, but keep in mind, I mean, you have to separate price reaction from what physically is going to happen. And clearly there's a huge fear, and that's very real. So could the prices spike another 5, 10, 15%? Could we go back to $60? Certainly if bombs and missiles start flying, I think we'd see 60, 65, maybe $70 very quickly. But I don't really think there'd be a true physical disruption, because also keep in mind that global petroleum inventories are at relatively high levels. So let's separate the price reaction from the physical reaction, what's truly going to happen for people at the pumps. I don't think there's going to be a physical reaction or a physical shortage at the pumps, but the prices might be much higher on fear.